The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We have Cy Monley of Sylvia's Financial going to be talking to us about the agricultural markets at 9:30. Today we start our show like we usually do, taking a look at the DAX, and you can see we were set up for some type of a rally if we were looking at it in relation to the S&P because we were completing a nice little retracement pattern there. But folks, we're going to move on to money management. I'm going to tell you a story. Whether you believe it or not is going to be up to you, but I'm going to put this chart up and let you take a look at it, and I'm going to try to explain it to you the best I can. So let's just get with it. About 20 years ago, I was in one of the shows from Money Show in New York, and I met a husband and wife team from New Jersey, and their business was they were handicapped horse players, and they were going into trading, and I trained them, and they still trade to this day. And they sent me something last night that I just absolutely cannot believe, and I have to share this with you. This is the results of the first race at Gulfstream Park yesterday. Now, this is about money management. This is also related to trading. You'll notice the green line there, the horse Mr. Joshua. He went off, as you can see, of a price of 0.20. In other words, for every $2 you bet, you got $2.10 back. That means he would have to win how many times, folks? Yes, you're right. 20 times in a row, 100 times in a row in order to get your $2 back. Now, that is not a very good investment. Now, look at the bottom of the page where the green arrow is to show you the payoffs. The win, place, show payoff should be win bigger, play smaller, and show smaller. But because everybody at the track bet on this horse, Mr. Joshua, to get their 10 cents on the $2, they all lost. And so all that money in the show pool went to the other horses. And look at the 8 and the 6 horse. He paid $52 for a show bet, and yet he only went off at 20-1. The 7 horse, Crocodile Charlie, went off at 10-1, and he paid $29. Folks, that's about money management. I mean, can you explain to me? I don't care if it's Secretariat, and Secretariat did go off at 210, but 210, 210, 210. He did that ever since right after the Kentucky Derby, where he was 3-1. Then he went off at 210, 210 for the rest of his life. Anyway, but can you imagine betting 210 on to get 10 cents back? Shut the front door and raise the rent. I find that really, really hard to believe. Okay, let's get on with some of these markets. We got some rocking and rolling here, of course. One of the things I wanted to talk to you about, folks, is the fact that the bond market and the Treasury note markets have been dropping open interest daily. Yesterday was a huge drop on that big run up. And of course, they reversed from that level. But what we're watching here is a situation where the open interest is dropping and prices are dropping. And that means that we are looking at a situation where, price is going up, open interest dropping means there's no new shorts coming in to the market to see if they're going to hold it up or not. Whether that will continue on or not, we're going to have to wait and see. But we'll watch that as we look around here. Now, we got some real wild action, of course, in the NASDAQ. Yesterday, the NASDAQ was on. I just couldn't believe it went up, and it looks like it's going to do it again today too. But here's what happened to the NASDAQ yesterday. I have to show you because it's going to be real interesting when we get to this price of 70.20 again, because we hit it way back in May, and we made a higher high yesterday in the NASDAQ by about 5 points, and then we backed off. I don't know where we're trading right now. We're trading at what, 70.15, so that's going to be an interesting one to watch. But that is a absolute spot on 100% dead target for a 78% retracement on the NASDAQ 100. And remember, that NASDAQ 100, that can be controlled with about 20 stocks, and that's not a whole lot of stocks. So just remember that all these things don't always go straight up, because what goes up can come down, but not necessarily in your lifetime. Now, I wanted to show one other one that I think is very interesting, and that is the chart of Microsoft. Give me a second here if I can pull it up. I know I've got it here somewhere. Oh, I'll get the Amazon up. We'll do the same thing. Amazon did exactly the same thing that the NASDAQ did yesterday. It went up and made a new high by 1 point at 16,335. The old high had been 16,33. So whether that's going to continue higher, we're going to be wait and see. But this is going to be very, very interesting what we're looking here as we go through these particular charts this morning. Now, we've been really fortunate because Mr. Z has sent us some charts here about the China index. Because if you want to see it, if you want to buy something and you think you want to find some value, take a look here, folks, at the this is the Shanghai stock market index, and you notice here we're making a triple bottom in the Shanghai stock market index. That's, in fact, I was there when they introduced that about 5 years ago. I was one of the speakers in Shanghai in this beautiful, I think it's 92-story stock market building. It's really awesome. And here is another one. This is a different one. This is a China bullish ETF. I'll get this up so you can take a look at it. And here again, we're seeing the exact same thing. You're seeing a triple bottom in these coming in at some pretty good levels. So let's keep an eye on that. I mean, if you trade China, and I have so much going on with other things, I haven't any time to trade China. But here's one that really, if you like patterns, look at this one, folks. This is a China shares. And look at this. This has a beautiful 3 drive to a bottom pattern. That's just spot on perfect. You got a beautiful ABCD. You got nice symmetry, just about everything. I don't know anything about the liquidity or anything on these things. I just wanted to forward these on from Mr. Z because he follows everything. I think he buys and sells rainbows at sometimes, but he follows so much stuff, I can't even believe it. Anyway, that's what we're watching here with these China shares. But that, if you had to find something to buy, that's what I would rather buy, as opposed to buy something that's way up in the air. And whether that's going to remain to that level. Yeah, he has a black box. His black box is between his ears. He's really got the smarts. Let me tell you, Mr. Z has got his act together for sure. But we'll be talking to another guy that's very smart at the half hour, and that's Sim Only, because he's going to have some really good information for us also, which I think we'll get some information that'll be very interesting. Now, remember on this rally that we had in Treasury bonds, that was nothing more than a 78% retracement on the German Bund that stopped exactly where it should have, and we backed off. So we're assuming here that we are going to start down in these bonds, because with open interest dropping and prices going up, that is short covering. That's all that is, and there's no ifs, ands, or buts. So all you got to be able to do is to wait for a good spot to sell them short, and you should be in pretty good stead here. Now, if we look at the overall market, let me just get this one up here. So I want to be able to see what we're doing here. Shucks. Oh, here's one I brought this morning. This was something that was real important because we were getting ready to break down in silver. I wanted to point this out. We were bringing this up today in the silver. I don't know if silver got to this 1620 or not, but it was certainly set up to break once we broke 1640. We'll be right back. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. We're going to take a look at the gold market. This is a 30-minute chart over the last few days. And as you can see here, I've marked off some price levels that we were looking for with that big, well, it wasn't big, but it was a $3 break stopping, right at the 78% level, much like what silver did. And once we were to break that, I was assuming maybe because of the jobs report would be the instigating thing for it, that we would get a move down. And as you can see, the price level we were looking for was $12.9250. We got down to $12.9310 so far. It was $4 above that right now. So that's basically what I was looking at. I had an order setting there, but it didn't get filled. So that happens a lot. But anyway, that's all I was doing, is getting ready for the jobs report to see how something like that was, going to unfold. But we'll see. But, these jobs reports, I really don't trust them. It's like those inflation numbers. They massage those things in different areas. So it's not always easy to keep track of what we have going on. Let's take a quick look at the euro here, folks, because this has been acting really nicely from a technical basis here over the last few days here. We had this ABCD pattern getting up there to 1720 level. It missed the actual D spot by 5 pips. And what we're looking at now is a possibility to get down here to this 116.20 level. Now, this is going to be really important because at that level, you'll notice that we'll be making a perfect 78% retracement from 2 days ago on the 30th. And we'll also be making a 50% retracement of the low that we made back on the 29th. So that would really be a very, very interesting. And not only that, we'll be down 100 pips from the high. And that, that in itself is important because the harmonic number in the euro runs somewhere between 80 and 100, depending upon volatility. So I would sort of watch this level at 116.20 because that's a spot where we might be able, to have a rally. We don't know if the euro has made a major bottom or not. We do know that it's incredibly oversold. All we've had so far is a 3-day rally here that's gone from 115.10 all the way up to 117.20, 200 points. But, it hasn't backed off very much. So that's what we're watching. But it was very, very oversold, much like we were in bonds a couple of weeks ago when bonds were down at that 141 level. And, of course, you saw what happened to them. They rallied all the way up, to the 78% level. and it was really a really interesting one to watch, because that move was straight up, and that was short covering, folks, because all during that move, the interest rate, the open interest was dropping, prices were going up, interest rates, open interest was dropping. That is a sign of short covering, and usually when that's over, the market sells off, and that's pretty much what's happened, so far today. Now, whether that's going to continue or not, we'll have to wait and see. But that's at least what it did in the last few days. The next few days we'll discover, what's going to happen. Someone's asked me to bring up the chart from our friend Tim Bost out of Sarasota, the financial astrologer that is pretty famous. I'll do the bonds in just a second, Terry, if you'll hold on a second. But this is the cycle work that we're looking at that he has. These are planetary cycles, and you'll notice that he's looking for the low coming in sometime, into July. Now that's sell-in may go away. Maybe that's the way it works. I don't know. But these are planetary cycles, and I don't believe they're related to the Bradley model. But the Bradley model is pretty much showing the same thing. We talked about that at the beginning of the week, and if I could, there it is. We'll bring it up and take a look at it, because we're pretty much at the same level. In fact, we're actually still below that level. We're still 100 points below where we were, 24753. So this still is in a downtrend. All we're doing in the Dow Jones right now is making a 78% retracement, much like we're doing in the S&P. And of course, the Nasdaq made new highs, but that's a market on steroids. That thing really goes crazy. So we'll watch that later on. But folks, this market really looks bearish. Well, let's move on to the next one. I don't want to make this, like, what was that? Who was it? I think it was Franklin Roosevelt that said, it's better to keep your mouth shut and to remain a fool than to open your mouth and remove all doubt. So I am going to be quiet. Let's bring up this one here. This was the Russell. This one stopped right there at that 1.27 for 2 days, and then of course yesterday, when the Nasdaq was going crazy, we got all the way up to 165, I believe, in the Russell, and also the open interest in the Nasdaq and the open interest in the Russell futures. All during this week, during this big run up, open interest has been dropping, folks. There's no new players coming in. This is not a good sign if you're bullish. You've got open interest is dropping and prices are going higher. That is short covering. And once shorts are done covering, there's a vacuum under the market, or supposedly, but whether that's going to be or not, we have to let the smarter minds try to figure that out. So watch that as we can. And I think we have, I wanted to show you Facebook here, because here's another one that went absolutely bonkers here. This was a beautiful chart here on Facebook. You'll notice that we had the beautiful 1.618 expansion down there at the bottom at 148. We had that beautiful 135 pattern that lasted for 5 days. And then, of course, we gapped above it, and we got up to 192. We'll probably make a double top up here today, probably around 194. But this was a beautiful pattern when that 135, but it failed. And that's why, you've got to decide, when you're trading these things, of whether you're going to be standing in front of a falling knife or get out of the way. Because as we've seen here in the bond market, when you have this monster technical rally, if you were bearish and didn't put a stop in, they took it to the cleaners. And, if you're not dirty and you have to go to the cleaners, that's not any fun. So use a stop. Stops are to prevent you from hurting yourself. It's for your own protection. If you don't use a stop, you're telling the market that you know more than Mr. Market, and nobody knows more than Mr. Market. So you're going to pay the price if you don't do that. That's the main thing. And that's the difference between usually a professional and a neophyte trader. Is the professional realizes it's all about money management. It's not the money that you make, it's the money that you don't lose. And that's the key to some of these things that we've been talking about here. And I guess we've been preaching about it for a very long time here at TFNN. But that's the way you have to do it sometime. At least with me, you have to be repeated over and over and over again until you get it right. And then sometimes you don't even get that right. Also, I wanted to answer a question. Someone asked me to repost the chart from our good friend Stan Harley from the Stan Harley Market Letter. And we'll bring this up and show you, because he's also looking for the market to come down into around June 19th with an ultimate low of around October the 10th. So whether that's going to be the case or not, we'll have to wait and see. But we will have SIME only on at the break, which will be in about 30 seconds, I guess. And that'll always be a lot of fun, because we're in the midst of the growing season. Weather is hotter than Hades, the hottest May in the history of Indiana since 1937, when they started keeping records. And that Indianapolis 500, of course, on Memorial Day, used to go to that. It was $2 to get in, and you could get in a whole car full of people for $5. Boy, that was a long time ago. 1955, Johnny Parsons won it. Okay, let's take a look here. SIME only coming up, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have SIME only of Sylvius Financial on the line. Si, are you there?
Yes, sir. Good morning, Larry.
Good morning to you. How's it over in Rock and Roll City there in Chicago? These markets are getting pretty jumpy, right?
Yes, sir, they are. We're heading into the volatility time next 6 weeks, of weather for corn, and then after that, soybeans. So it should be fun time.
Si, it sure is. The question that I have is on the technical side of corn. I'm going to put this chart up so we can talk about it. because it is a really bullish chart pattern in corn that I'm looking at here. We had that 3 drive to a top pattern up there at that 429 level. We broke about 15 cents, but to me, if we can get corn down to $4 a bushel, boy, I think that would be Christmas Day. I don't know what you're feeling on corn.
Sure, I think the balance sheet globally, Larry, and then dialing it back to the U.S. If you look at global supplies, have peaked. So if global supplies have peaked in corn, then you go down to, okay, can the U.S. make that up? Do we need to have a big yield to supply the global demand, right? For corn to get below $4, I think it's going to be after July, when we know we have a big crop. Up until that point, I think it's going to be hard. I think the pullbacks are going to be tight. We've already had a 20-cent rally. I'm looking at a heat dome setting up, Larry. I think corn's next 20, 30 cents is up, not down, just from a fundamental standpoint.
It certainly could. I'd like to bring this chart to your attention. Of course, I sent it to you already. You already know it, and that is this monster top that we've had here in November soybeans. It's hard to believe that since the end of March, we've hit the 1060 level in November being 6 times. Cy, I can say with a great deal of confidence, if we get above 1066, the Battle of Hastings, this is going to be one bullish market.
And you know why is, Larry, is what's happened is your natural seller is gone. So the global farmer sees this as well. Okay, they get rallies to 1050, they sell. You've had currencies break in Brazil and Argentina, which makes their soybeans worth more. So they've been selling their crops, both old crop and new crop. So the reason you get those explosions is all of a sudden you have something in the market change and you no longer have a natural seller. So I think these natural sellers, i.e. farmers, global farmers, have been selling very aggressive. Why? Because the last 3 years of prices, these are good prices. And so they're very fearful of big yields again and seeing $9 beans and $3.30 corn. So that, to your point, technically, if we go, your sellers are gone.
Well, that's really good information. So I never thought of it that way, but if you don't have sellers there for natural hedging, the only place it can go is up.
That's right.
In the slightest bit of hot weather, slightest bit of hot weather, yeah. I mean, boy, the weather in Indiana, 1937 was the last time they had records like this. I mean, you're talking, 90-degree heat 8 days in a row. That's really quite something. And I know the markets reflected that. Of course, we had a little bit of a respite here, but they've sold off just very minimal. But I'm just waiting to see, what the support level is going to be to take a look at it. Any other market that? Well, let's talk a second about the cotton, because you and I were chatting about that last week when we had this big move in cotton. What caused that? Was that also weather? Was that weather related also?
Yeah, that was weather related, and that's also tight supplies. The cotton crops had a really dry, and then had some flooding, so that was definitely weather related. And while it looks like on paper we have big stocks here, the global demand for cotton is pretty high. So while cotton might be making a top here, that pullback is going to be supported. These big bull moves have long tails. I don't think you're going to have a spike high and then straight down. You're going to have to prove over the next couple months that the crop is okay here.
Yeah. That certainly makes good sense. Now, the next one we want to talk about is one of your favorites, and that's sugar. I know you were loading up on that around $11, and boy, we've had a heck of a move here for 2 weeks, and looks like it's got legs this time. It looks like we could get this thing moving. On any pullback, I'd certainly want to be buying or adding to it. What's your feeling on the sugar?
I agree there, Larry. I think the bear news in sugar over the last year is priced in, and sugar is pretty inelastic, meaning people will use sugar no matter what. So you've had a huge bear push lower, and there's a lot of people talking $7, $8, just super cheap sugar, and just didn't happen. So I do think it's going to take time, right? I think you still have large stocks overhanging, so my thinking is it's going to take some proving. The one I'm watching is coffee, Larry.
Let's talk about coffee. I know you've been jumping on that. That's been a good one. Yeah.
It's got a fundamental change that happened pretty quickly. You're getting freezes in Brazil, and this is their time to get freezes over the next 6 weeks. So it's coming early, so all of a sudden coffee pops, and I don't think it's going to let up. I think our weather pattern looks like it's going to stay pretty cold, so coffee looks like, and it could have a lot more legs here, so I'm looking for places to be buying that on pullbacks as well.
It had a really monster rally yesterday. Is that weather-related out of Brazil? Is that what caused that?
Yep.
Now, we have a question for one of our listeners, Si. How many different weather services do you use to try to get accurate information on what the weather should be like?
I've got a couple, but I tell you, Larry, the big thing with weather is nobody can really predict 2 weeks past, right? You're looking at changes. I'm looking at sea surface temperatures right now for the grains. I'll give you an example. If it gets cold, if it gets cold in certain areas, that is historically setting up for a dome in the Midwest. So you look at these changes, but Larry, the thing about these weathers is you kind of got to take all of them with a grain of salt, right? You just gotta understand that they're flip-flopping. I don't think anybody's that much better than the next guy, so you got to be careful with that. You got to be careful with just trading weather only. You'll get these moves, and then you got to say, okay, this can change on me pretty quick. You got to. It's all about sizing and not just trusting your weather guy. So I look at a couple.
Okay. One of our listeners is asking us, are you buying the December 440 calls? Do you think that that looks like pretty good value?
In corn?
Yes.
Yes, I would. Now, the thing is from a statistical standpoint, corn, I believe, is 420 low, 480 high, just looking at my numbers and the value, where if you start to dial down yields. So if you buy the 440 calls, right, at some point you get to 460, 470, you're going to want to be out. And you're going to have another 10, 12, 15% move up. That's probably enough. You're going to need worse weather. And I think corn above 480 this year is going to be hard. Okay, so you buy them, have an exit. Right, to your point, we got to look at extensions and don't be afraid to sell them.
Okay, that makes really good sense. Listen, I wanted you to thank you for being on our show. I know you're really busy, especially on Friday and stuff. So thanks a lot. I'd like to have you on maybe right around the 4th of July possibly or sooner as we get into this growing season, and especially if the weather gets hotter. So thanks for joining us, Si. We really appreciate it, my friend.
10-4, Larry.
You bet. Si Monley, Sylvius Financial. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're back, and we're going to take a look at this bond market here. As you can see, this is the chart for the nearby bonds. Now, the reason for the gap that you're seeing here is because we've rolled over between the June and September bonds. We're now trading September bonds as the spot bond. The price levels are relatively close, and the move down is correct, except that that gap is not. That is not correct. But we have moved down to the 50% retracement of that move here. Now, whether it's going to hold this level or not will have to remain to be seen. But remember, these last 4 days of that big run-up from 142 to 147 was all in decreasing open interest, and that means the market is in a weak mode, because when buyers are covering their shorts, there's no buyers left, and that makes the market drop. So that doesn't mean we're going to go straight down from here, but it does mean that there's not a lot of buyers coming in. We're seeing the same thing in the NASDAQ, and we're seeing the same thing in the Russell. This is the dropping in open interest with these prices going up, and I'm not just a small amount. It was substantial in those indices. So we'll watch and see what happens next week. But we've just shattered, just a few minutes ago, we just shattered that big 78% level in the NASDAQ. The number was at 70.28, and I just saw that we saw a print here. The beeper went off at 70.30. So we've certainly had a really big move, coming in at that point right now. So we'll see how much farther we're going to run here, but it's been a big move thus far. Today we've got the Dow up a couple hundred points, it looks like, and the NASDAQ is rocking and rolling. And let's see if the S&P has exceeded its 78% level. Let's just get that up here, because that's another one that we like to, to keep an eye on. I always use an hourly chart. Yeah, we're almost back to that same level, which is 727. I don't think it's going to be too much dramatic here, but we'll wait and see here. I have to go with the cycle stuff that we're looking at from our good friend Tim Boast and Stan Harley, and also Bill Meridian, who will be our guest on Monday. We'll always have him as a great guest, and so that'll be a fun thing to look at too. So we'll be watching those fellows and what they're looking for. Okay, another question that someone's asked about. Let me get it up here to take a quick look. I wanted to give you as much information as I possibly can, and that is about this euro. If we were talking about this, the question is what we were looking for in the euro when it made that bottom. As you'll notice here, this was the chart from Monday. We were expecting at the bottom somewhere around the 115.40 level. We got to 115.10 on Monday. We've rallied 200 pips since that point, so that equals the same rally that we had. In fact, it exceeds the rally that we had back on the 20th to the 22nd, and it matches the rally between the 9th and the 14th. The 9th and the 14th was 200 pips, and this one was 200 pips. So we're in equality right now with an oversold market. So this has corrected the oversold condition. Now we're going to find out if this euro move has legs or not. on what the next swing is going to be. We'll have to wait to see what the correction was going to be, and that should come in around the 116.20 level, as we pointed out, earlier in the show. So let's watch that as we're going through some of these things. Now, someone asked a question about the silver because they had been looking at a really nice ABCD pattern in silver. This comes from one of our friends over in Deutschland, over in Germany, and they were seeing a beautiful ABCD pattern at the 1642 level. And of course, it is a Gartley pattern. It sits right there. But what happened? Boom, down to 1633. And that's because of the jobs report. And that's why you use a stop, because these patterns are only probabilities. They are not certainties. And you don't ever want to think it's certainty, because that's not the way things operate for sure. There's just there's no way that you can view it any other way than that. That's extremely important. That's just my 2 cents worth. So we'll see what's going on from these levels. Hold on one second, folks. I have my my beeper is going off again, and I wanted to be able to make sure that I'm able to catch this up, because I'm watching the action in gold, because there's a possibility this low in gold at 1292 might hold today, and I want to be able to pay attention to that, because it should be a pretty interesting thing to watch as we get through. We've had some really wild volatility in the Canadian dollar. I'm not able to bring it up right now, but it's been pretty crazy. Now, another one that we need to watch here, I want to show you this chart, because this is really important from a long-term perspective. No, I can cover the oil. I'll be happy to do that. Just 1 second here. We've been bearish oil since we made the top up there at the 1272. We went right to the 61. Let's just get this chart up so you folks can take a quick look at it. Just give me a second here and we'll get it right up. This is where we were coming into Monday, and you'll notice here that we hit the exact 61% retracement there at 650, 65, 75. We rallied all the way up to 68.20, which was a 68.60, which was a exact 382 retracement of that move down. And now we've come down. We've made a double bottom down here at the 66 level. We go below 66.57, boys and girls. We're heading to 62. That's where it measures to. So this is a market that's down substantially. We're down better than 5% in just a week. That's not a bullish sign, because if it's bullish, it usually backs off little by little, much like we're seeing in the corn market and the wheat market. Those markets are, they're just coming back, little by little. Now take a look at the heating oil market. You'll see we had the same things happen in heating oil. Now this isn't up to date, because the support that we had here we've already came through that support. We've broken through the 213 by a great deal of support. So the next support in heating oil is going to come in around the 194 level. So when these things don't work, boy, you've got to stand aside, because it's all probabilities. That's the main thing. The key level, Ruby, to watch for is that 65.78. That was a low on Monday. That's the one that you want to pay attention to, because that was an exact 61% retracement. From there, we rallied $3 a barrel in oil right up to the 382 level. And then now we're coming back double testing it. That usually tells us that it only lasted a 2-day rally. That is not a good sign. So we'll watch that closely. I think we'll watch it. Anyway, someone's asked about the buy point in corn. Like Cy said, he thinks it's 20 cents to the downside, so that's around 4.15 in Christmas corn. I'm frankly waiting for the 3.99 level, because no one thinks it can get there, but the technicians of the world who take a look at it says, well, there's a better than even chance that it might be able to do it. So that's the key thing. The main thing that you want to remember, folks, about anything that we talked about with Cy is this chart that we're going to bring up here. And this is the one you have to do. This is November soybeans, new crop beans. 6 times since March, we've hit the exact 660 a bushel. This is where they're hedging. If they get above that, it's on its way. And if they've all sold out, in other words, if all these farmers have sold their crop at 660 or 1060 and it starts going above that, there's no soybeans for sale, folks. And that's where the trouble lies, or the opportunity lies. So watch beans around the November beans around the 1024 level. You'll notice that that's a perfect 61% retracement. We're trading a little above that right now, but we still got a chance to get there. So let's pay attention to that. We got a real shot here. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. And last week I did a whole lot of stocks to look at, see what they were doing. None of those have been violated as far as hold on one second here, if I can just get this chart up and we'll be able to take a look at it here, have been violated as far as whether they've been able to, violate any of these price levels, and they have not. I mean, they, maybe a half a point, but a stock that's $1,000 and a half a point is really not very much. Microsoft came within 1 cent of making the $100 level. It got to 99.99. I wonder how big that order was there to prevent it from going any higher than that. So whether that means anything or not, I don't know, but we have to pay pretty close attention to some of these things because it would make a really interesting spot to take a look at these as we look. I also wanted to bring up, someone's asked a question about the FTSE because it's had one heck of a run. I want to bring this up here as we're closing the show. You'll notice here that we had the big move. We've had the tiny bit of a back off, really not very much at all. So that still looks very, very bullish, but I don't know what will happen from that level or not. So we'll see. Okay, Anyway, live every day in an attitude of gratitude, and may God bless. And we'll see you next week, God willing, and we'll see how. Oh, I thought the music was coming up. I mistook that. Anyway, I guess the show's coming up to an end. Anybody have any other questions or not? Just be patient on the corn, folks. I think we're going to get a chance to buy it. You know, the trend, short-term trend is down, and you know, we got this weekend coming up here, the 1st of June, and we'll see what's going to happen here. So that's what we're watching, and let's keep an eye on some of these things because it should be a lot of fun. So, like I said, live every day in an attitude of gratitude, and may God bless. The words of Anthony Robbins. Thanks, folks.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
No matter what